All right, next item on the agenda is the annual financial report, and is Paul Thurman here? Paul, come on up, and I thought you brought somebody with you too?
Paul, you smartened up. You brought somebody to help you this time, huh?
Yeah, we did. Good evening.
Good
evening.
This is one of our managers, Chris Scallett. He was the on-site supervisor on the audit this year. So if you have any questions, he's going to answer them.
Well, maybe you and Tim should have coffee. I mean, Mr. Walsh, I'm sorry.
As usual, the audit, as it has over the last number of years, went very well. The cooperation of Tim and his staff greatly helped get the job done in an efficient manner. There were a number of questions that were raised by the board, and it is my understanding that all of those answers have been disseminated to the board.
We got them this afternoon.
Huh?
We got them this afternoon. I don't know about my colleagues here, but
There
I was
were,
kind of busy this afternoon at work.
If there are still questions, I'm sure Tim will communicate them back to us, and we'll deal with them as they arise. But I think I reviewed them again today, all the answers we gave, and I believe that all of the items that were questioned by the board have been answered, I hope, to your satisfaction. But if are still some questions left, let us know, please, and we will take care of that. In terms of the audit report this year, some things have changed in the presentation, primarily due to what our profession, or what I laughingly call the clarity standards. And one of the major changes you're going to see is in the table of contents, where a lot of the information that is shown under what is now called supplementary information used to be under required supplementary information. It's all the same information that was there before. They just now segregated it into two parts, and I honestly will tell you, I don't know why, but they did, and we have to follow what they tell us. They've tried to, I believe, separate what are deemed to be the operating accounts from, for lack of a better term, non-operating accounts. You'll notice that under supplementary information, you're going to see the debt service fund, the capital projects fund, and the fire prevention and safety fund. And they deem those to be in a non-operating category. So they're trying to, I believe, focus the financial presentation on the operations of the government itself, and not so much those items which, in the case of debt service, is just a matter of accounting for the tax levy to retire the debt. And obviously in the case of capital projects and fire prevention and safety, those are construction type accounts, and they are not considered to be operating per se. In terms of the financials themselves, there are some new terminology this year. You will see it on Exhibit A on page 12, and again you will see it on Exhibit C on page 14. And I refer you to an area that is now called deferred inflows of resources.
Tim, Tim McGinnis, what page is that on for us?
The first one's on page 12.
217.
Huh?
We have a board document, so it's on 217 for the school board.
Can you give me the page of the actual report?
I'm sorry?
Could you also give the page from the actual report?
You did
Page
12.
12.
Okay.
Oh, page 12, I'm sorry.
Right, he said page 12, but for us it's 217 in board book.
And
Sorry,
also,
Paul.
you'll see the same terminology on page 14 and 15, which is our Exhibit C of the audit report. And that terminology is the called deferred inflows of resources, specifically unavailable revenue from property taxes. In prior periods, those were shown under the liabilities. They have now, under this clarity standard, broken this area out, and for a definition of what is involved there, I believe is going to be found. Help me a minute.
Page 27.
That's it. In the notes of financial statements, page 27, item M of the summary of significant accounting policies
Just 235.
defines the deferred inflows of resources and gives you a little background as to what is being considered and what is being reported in that category. And all it is, basically, it's the same information that was there last year. The names have been changed. And again, this is as a result of what they call the clarity standards. One of the things that happened this year, and it was one of the items that was brought up in one of the board questions, was in the area of expenditures. Where do we put that, my friend? Why can't I find what I wanted? The on behalf.
There's two places you can do it. 43.
43. Right by it.
43 for the board would be on 253.
Page 43, under the instructional expenditures for regular programs, you'll notice there's quite a large increase in the item called on behalf payments. And that is because the amount that is deemed to be contributed by and by the state for its share of pension contributions, they raised the percentage substantially from
Went from 28.05% to 35.41%.
so that picks up, that accounts for about 900,000 of expenditures. And also there is a like increase in revenues under state sources on page 42. Under state sources, the last item is the on behalf payments. So it is, we recognize the income and the expenditure, and the reason for the increase is because the teachers' retirement system changed the rate that the state was going to pay. It's a wash item in terms of the bottom line, but it's one of the items that took quite a leap this year.
So this $3,854,536 is what the teachers are paying into theirs?
No, this is what it is deemed that the state is going to pay in on behalf of its
On
share.
behalf of the teachers.
On behalf of the teachers. I have no way to sit here and tell you
If they're paying it?
when they made the payment, or if they made the payment for that matter. But obviously, the percentage is increasing. It has over the last number of years. I believe this year was probably the largest single year increase that I've seen. But it really, in terms of the financial statements of the district, we are required to report these on behalf payments, but they really, it's not money that came into or out of your pocketbook. Other than that, the audit is somewhat self-explanatory. The cash position of the general fund obviously took quite a jump this year, primarily because of the receipt of the $8 million plus of the construction grant. And that is now sitting in our working cash account which is part of the general fund. So from a financial position, the district seems to be in a very healthy state. The cash and investments, as you can see, increased. Again, I'll refer you to pages 14 and 15 of Exhibit C. The overall cash and investments of the district increased from $9,700,000 to $20,900,000, and in part from the construction grant and the balance from good budget control and controlling expenditures. And the other item which contributed is that for the first time in a goodly number of years, the state is finally current on its mandated categorical payments. We had virtually no receivables of any kind this year, which is the first time in all of our district's history that we noticed that happening. So that those factors all contributed to the strength of the cash of the district. Other than that, everything else is fairly self-explanatory. Chris and I will try to answer any other questions you may have.
Chris, did you complete the AFR for the district?
I have completed it. We have not submitted it yet because we are waiting for.
Can you summarize that for the board tonight?
Yes, for the approval of the audit, which you'll notice that the draft copy that you have received, it's not dated yet because we are required to date it when the district has accepted the audit, which is what I understand part of the function is this evening.
Right, the board policy is that they review the AFR and the audit before we submit it to the state. So this is their review. I was just wondering if we can go through the AFR real quick.
What page is that at?
Sure, the AFR is going to be a different document.
Okay.
I think it's included though, Mr. McGinnis, correct, in the
Yes.
board packet?
What,
148 is the AFR
148 of our board?
of our board packet.
Okay.
I mean, the AFR is, it's a direct reflection of the audit report. And I know Mr. Walsh had some questions regarding this as well. One of the questions that he had was, this is going to be, these page numbers are ridiculous on here.
With the categoricals.
Yeah, and I know Paul kind of explained the categoricals.
If you just give me the page number on your document, I can go down.
These don't have page numbers on it for us. It's going to be page, should be page 3.
Okay, so for the board, that's
What is this
152.
questionnaire?
And start,
Next one actually from there.
Okay, so that's one.
152.
And as you can see, we obviously didn't have any deferred revenues for the state functions that are on the AFR here. Like Paul said, this is the first time in years that state's been keeping up with making their payments. So that
they were all actually dispersed and receipted by the district prior to June 30.
My question was,
Contributing factors.
are the deferred property taxes that you spoke about,
I'm sorry?
they don't fit into that category?
Right, I mean, this only reflects, as you can see on the account name on the top, the 3,000 accounts, which are actually state
They're
revenues.
state funds.
They're not property taxes, those are local revenues. So this chart would have nothing to do with revenues, it's just strictly straight state revenues.
I think the only substantive there seemed to be some numbers that didn't match, but the one on the long-term debt,
Yeah, that was, I corrected that in the audit report. For some reason, that just must have got carried over, but the rate is 6.9%. And if you go back to the audit report, that number was changed, and now that the audit report reflects the long-term debt category, which that's on page 3, yeah, right there. So the audit report now matches the 6.9%,
Okay.
which is the $52.8 million, and with the 44.76 outstanding debt. So that's been corrected. That was just.
is that the only thing that had changed then on this report to the state?
Right, the AFR did not have to have any changes.
Okay.
It was just some typos in the audit report, but the AFR was good.
I have a question on the AFR.
Yes,
It says annual financial report is unqualified.
yes. That means there is no restriction on the opinion. It is what
Okay.
is deemed to be a clean opinion. And while we're at it, another matter of showing how well things have gone, I'll refer you to page 5, or page 4, which is the estimated financial profile summary. And the district has once again achieved recognition in its financial affairs. This is a measure, as you can see, of 4 items, and the designation of recognition is the highest that a district can achieve.
Very good job, Tim. So, given the audit that you've done, Chris, because I'm going to refer to him because he did the audit here. Is there anything that we have to watch out for? I know we've made one change that was per the auditor's request. Anything else, or, you know?
I mean, I think the only thing that, and me and Tim discussed this too, was for the services provided to other districts, just to separate that out into its own function, which I'm assuming he's done.
Yeah, we're going to do that.
Transfer it in
Yeah.
tonight.
Yeah, so, I mean, but other than that, I mean, I didn't run into much of anything. Like Paul said, the district does a good job here. The staff is very well-trained, and they obviously are very willing to help with whatever I need. I mean, it seems every year, this is now my 3rd year here, I mean, we've been growing in a sense of financially, and anything that I do recommend, we obviously take the course of action to change that.
I have 3 questions. I didn't have a chance to go through
That's
all
okay.
this information, but I still don't understand who does the financial reports, even with your explanation. Do we do the financial reports and you audit them, or do you prepare the financial report as we sit there and talk to you?
We assist in the preparation of them.
I mean, did we actually put that document together?
There's a
Does the
management
financial-
representation letter that the board will sign. And one of those letters, one of those items in the letters, and then I'll read it verbatim of what it says. It says, as part of the audit, the district assists with the preparation of the financial statements and related notes. The district acknowledges responsibility as it relates to those services, including that the district assume all management responsibilities, oversee the services by designating an individual who possesses suitable skill, knowledge, or expertise, that would be Tim, evaluate the adequacy and results of the services performed, and accept responsibility for the results of the services.
I read that. You don't have to
Yeah.
read it to
The
me again.
financial,
I work for a corporation.
Mhm.
We're a SEC reporting.
Right,
Our accountants put together a statement, and then Deloitte & Touche audits it.
right.
Nobody questions, we do it. I still don't understand if our staff prepares the financials and you audit them, or you prepare them as they're talking to you.
the financial statements are actually prepared by the treasurer's office, for the reports you get every month. They're taking those financial statements and then auditing them, and then adding in the
Right.
accruals that they have to add in.
Right.
But the basis of what they have is the financial statements that come from the
But the
treasurer's
audit
office.
report says we report our financials on an accrual basis.
Yes, that is
The
correct.
reports from the treasurer aren't on an accrual basis, so they can't possibly be the basis for an audited financial
They
statement.
are the start.
Okay,
And
good.
I personally
Now we're
am-
getting somewhere.
Yeah, I personally am the senior on the job for the Riverside Township School Treasurer's Office. And they are on a cash basis only.
Right.
And it is those financial records that form the beginning of our audit report, of our audit. We, in the case of District 208, we take their cash financial records and we convert them through to a modified and full accrual basis.
So you
But the-
prepare the accrued financial statements on accrual basis for us,
Yes.
correct? Thank you.
Yes.
It wasn't that hard of a question, I don't
Yes.
think. The second thing is, it's still unclear to me, although you might have explained it finally, whether we have risk with our cash at First American Bank. In the audit report, it said we did initially.
Okay, there are a number of accounts at First American Bank.
Right.
There is one called a special account receipt account, which is maintained through the Township School Treasurer. We refer to it as an SAR account. That
What is
is controlled through the Township School Treasurer.
What is SAR?
It is fully
account?
collateralized. The account that appears on your financial statements, I believe, is an imprest and student activity. And that is a separate account which is not under the control of the Township School Treasurer. That is under the control of this district.
But it is
Only.
collateralized.
So our
Above
imprest
22,000.
account and our
Sorry?
student activity accounts that are at that bank, they're fully collateralized.
Correct, and the audit was changed to reflect that. Tim had sent me the collateral, and then that's why I changed the report, so yes, it is fully collateralized and or insured by the FDIC.
Okay. Thank you.
What does collateralized mean?
Means that, well, the first line of defense is the FDIC, and they insure accounts up to the first $250,000. To the extent that an institution holds more than that, it is normal that a entity will ask that financial institution to pledge certain collateral, be in terms of treasury bonds, be in terms of municipal bonds, pledge them specifically to the governmental entity. So in case things go belly up, there are assets which are set aside in the case of a bank failure to make the district whole. And that's what is collateral. The other word would be guarantee that the funds are secure.
I mean, is it equivalent to the FDIC? Is it
It's
equivalent
over
to
and above the
100%?
FDIC. The FDIC only goes to 250.
Right, but
No, it's
is it
not
on?
equivalent, John. The
So what-
FDIC
what-
has to
No,
pay.
it's not, well, it's not,
What percentage risk is there then?
I'm sorry?
Okay, can you give me a percentage risk that it's covering? Collateralized,
The
what,
collateral
70% plus or
pledged-
minus?
The collateral that has been pledged against the cash and investments of the district equal to or exceed the amount that's being carried or being shown at June 30th.
That's not, he's asking this question, if we have $350,000 in the bank, the FDIC insurance insures $250,000, which it might take some time, but you're gonna get the $250,000 if the bank goes under. He wants to understand if they post bonds or whatever they post, government bonds or something as collateral for the additional $100,000, is that as good as the FDI insurance about certainty of payment? Or is there a little bit more risk in the collateralized deposits?
If the pledge is in government, U.S. government securities, the risk is zero. If the pledge is in municipal securities, depending on their rating, there might be some
The other
minor
risk is if they go belly up and they collateralized several accounts with the same collateral, you're gonna get in line with other, it's not as safe as the
Yeah, but
FDIC insurance.
the secret there is that the collateral that we are looking for, because there's two classes of collateral. One is collateral that is pledged by the institution and is in the name of the depositor. There are others, collateral that is pledged in general, which is not in the name of the district. That is subject to creditors and everything else. That which is set aside for, in our name, that's ours.
And that's how they do it?
That's how they do it.
So we're good.
We're very
Yes.
good.
Yes.
Okay.
All right, any other questions for
There's
Paul?
one more. Tim, you had one more. I thought you had three, didn't you? Are you good?
I think that's enough. I'll look at the.
All right,
Chris,
any other
anything
questions?
else you want to highlight?
No, I mean, listen, like Paul said, if there's anything else that you need to discuss, feel free to email and we can talk through the items that I responded to.
All right, any other questions?
Yeah, I had a question. There, somewhere in here, I don't know the exact page, it mentioned the potential income tax appeal, property tax appeals, and you made some statement about that.
Is that in your letter,
Did you-
Chris? or
That must
Paul?
be in the, is that the MD&A maybe?
What's the MD&A, Chris?
Management
Management
discussion.
discussion and analysis.
All right.
Gary knew that.
I know there's Schedule 15, which is non-refund over a 5-year period. Property taxes in general are always subject to appeals. That's a legal process, which are handled through the Cook County Treasurer's Office and are adjudicated through the Board of Tax Appeals. Based on, while a number of appeals may be filed, and I can't give you a statistic, but definitely not all of them are upheld. So as they are settled, they take that money out of current collections from us now. But until the thing is settled, there are refunds being made today from taxes maybe a couple of years that were appealed a couple of years ago, which are finally being settled. And if there is a refund to be made, they will take that out of our current year.
So Chris, let me ask you a question. Best practices,
It's on
which I think
page
we're
10.
using.
I'm sorry.
Okay. Which I think we're using is we go to our we go to the law firm we use, we go to their tax attorney as the expert and ask him every year as we're developing the budget, what is our exposure to tax appeals? He then gives that number. Is that best practices to do that?
Sure.
Yes, and in addition, from an accounting standpoint, we set up I believe we use a 1%
Yes.
reserve. And if you call your attention, please, to page 74 in Schedule 14, which is the last 5 years of tax collections versus the levy. And you'll see that we are in the upper.
Schedule 14, page 74, sorry.
Is that of the,
Their report.
your report?
Yours.
So that would be for the board like 288? Is your Schedule 14. So Paul, can you go back to what on page 14?
And what's on there is a schedule of showing the assessed valuations for the last 5 years, the tax rates, the extensions, and the collections through June 30th. And and then they show you the percentage of the total extension that's being collected. And you can see we're in the upper 90s. In 2011, it was the lowest point. It got a little bit below 97%, but there are a number of years it's getting closer and closer to 99%. So the 1% allowance, when we set up the revenue from the levy, we do it net of that 1%. So we've already, in our presentation, have accounted for a 1% loss.
So my question to you then is, this 1% loss is still owed to us. We might have a hard time getting it, but it's still owed to us, am I right?
It's owed, but historically, you're never going to see it. It covers appeals, it covers people that just don't pay them. Every so often they have what they refer to as scavenger sales. And that's where they go after bits and pieces of property they haven't paid for years, and they collect, and you may end up at 39 cents from a year 19.
So Tim, when you do the budget, you factor in that loss factor.
We use 2%.
We use, so when you say you're doing one for the levy that hasn't been collected that you're doing on accrual basis, right?
We are using an allowance under the accrual basis of 1%.
So we would have done two, Matt, because that's what we do, and when they
Yeah.
adjusted for accruals, they're
No,
only
you're only-
adjusting the accrued amount by one.
We're conservative.
If you're being, you're being ultra conservative, and there's nothing wrong with that. But the reality is,
The district had to make some payments prior to my arrival that we weren't planning on. They were larger than what we had budgeted for and set us back, so that's why we
Kevin,
implemented the practice of putting at least $500,000. I think we're down to $500,000. We had more than that before.
right.
Yeah.
Kevin, what page of our board packet is page 10 of their audit report?
213.
213.
John, look at the bottom of page 213 in the last paragraph. I think that's what you were referring to.
Page 10 of your audit.
Page 10 in the last paragraph.
Oh, that's MD&A 10.
oh, MD&A too.
Yeah.
Is that what you're referring to, John, when you were asking what they said?
Yeah, it was something, yeah.
We talk about appeals on page 6, the first page of the management discussion analysis, the first bullet point of the financial highlights. I don't know if that, I think that's probably where he was.
Property tax revenue.
Yeah.
It says property tax appeals are in there.
All right, any other questions for Paul or Chris? Thank you, gentlemen, for doing this. We appreciate all your help.
I want to
Please
thank you personally for having us here.
Submit it into the state, please.
This is
Okay,
my
I'll do that.
my last time.
Okay.
I am retiring at the end of this year. After 52 years in this business, I think it's time for me to hang it up and try something else.
I'm sure Mr. Walsh will miss your banter every year, annual
Well,
banter every year, so.
I promise that Chris will take good care of it. I have trained him, I trust well, so our services shall continue undiminished.
So as I stated before, though, as we're over to talk, make sure we submit that.
I will
in.
do that first thing tomorrow morning.
Just work accordingly with Tim.
That's fine, and I'll send him a copy of the
All right.
submitted statement.
Thank you very
Thank you,
much.
Chris.
Have
Thank
a
you,
pleasure.
Chris.
Have a safe trip home.
Thank you.
Good luck on your retirement.
All right, so
Thank
let's,
you.
yes, good luck in your retirement.
Yep.
Give Tim your number so that you guys are gonna be late.
Oh, he's got my number on speed
He
dial.
can
probably.
find me.